What is up guys, Taiki here, and in this video I'll be addressing two questions. What gives governance tokens value? And why does this protocol need a token? If you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. I believe that there are three main factors that give governance tokens value. First, tokens help bootstrap growth of the protocol. Second, it aligns incentives between the users and the protocol. And lastly, it protects it through network effects. So I'll be addressing each of these factors. So here we go. So governance tokens create interest for the protocol via airdrops and liquidity mining. To define each of those terms, airdrops are when protocol rewards early users by giving them free tokens. The most famous of them being Uniswap, the Uniswap airdrop, which is worth around $10,000 by now. Second, there's this thing called liquidity mining, where users can supply initial liquidity to DeFi applications and receive rewards for doing so. Compound was the first project to do so, and many other projects followed. But it still doesn't answer the question, what gives governance tokens value? If you look at the Uniswap governance token, it doesn't do anything, right? It doesn't receive any fees earned by the protocol. It seems like Uni holders are speculating that in the future, Uni will act like XSushi. And if you don't know what XSushi is, you can essentially get XSushi by staking sushi on Sushiswap. And the staked token can earn a 0.05% fee on all trading fees earned by the protocol. But in the moment, Uniswap, it doesn't do anything, right? And in the future, it might do something, but right now, not really. So it's natural to ask this question, like, why is the Uni token even needed? And to understand that, you have to think about why protocols need governance tokens to incentivize early users. And to understand this idea, let's first think about why capitalism is so successful. And capitalism essentially aligns incentives of society with individuals. It allows people to be selfish and still benefit society by serving each other. If you're an early entrepreneur in America, you can create a product, create a business that'll make you rich. But in the process, that product might, improve productivity or improve the quality of life for its citizens. And that's why, capitalism works, right? Or at least that's why US is the powerhouse that it is today. And similarly, governance tokens are rewards for early adopters. And I'll be going to this in more detail and with a few examples. So imagine you're an early liquidity provider on Uniswap, but there are zero incentives, like literally no incentives to do so. Well, if that's the case, the Uniswap DEX will be illiquid. The user experience will be absolute horseshit because there's going to be like 10% slippage everywhere, and there's going to be no volume in the protocol, and it would not be the juggernaut that it is today. But if you're an early LP on Uniswap and there are incentives, then you're going to have incentive to provide liquidity to earn the rewards. So the liquidity grows as more and more people provide liquidity. The user experience will improve as more and more people use it through feedback with lower slippage. And Uniswap becomes easy to use for newcomers. If you're a new DeFi user, probably going to download MetaMask, and the first app you're going to use is probably going to be Uniswap, right? Because it's the biggest name and you know that it's relatively safe and it's very, very liquid. Excuse me. And protocols need a mechanism to reward early adopters with something taken from late adopters. So the easiest way to understand this idea is thinking about Bitcoin. Imagine if early adopters of Bitcoin did not benefit from late adopters. It'll be dead by now, right? I mean, the reason I bought Bitcoin is because people after me will buy Bitcoin and my token price will go up and I can make more money, right? That's why Bitcoin is so valuable. Similarly, imagine if early adopters of Uniswap did not benefit from late adopters. It would not have grown to the size it is today. Additionally, to add on to what I talked about with bootstrapping growth, if the price of the token goes up, protocols can use it to hire developers, by maybe selling the token in the market and paying fiat to developers, raise money, and as the governance tokens go up in value, it increases the valuation of the protocol, helping them raise money from VCs and investors. And then it can also attract talent, right? If you have a $20 billion protocol like Uniswap, it's going to be easy to attract talent. And lastly, we're going to talk about network effects. And these governance tokens naturally create network effects that act as each protocol's competitive moat. Network effects are really, really important because 99% of applications on Ethereum, on DeFi, are open source, meaning anyone can fork any project. And this is like the main, I guess, debate between Uniswap and Sushiswap, where Uniswap is the original and Sushiswap essentially forked Uniswap's code and made some improvements to make themselves valuable. And it's natural to think, if projects can be forked, then what gives the original a premium, right? If projects can constantly fork each other and slightly improve over time, then the original project shouldn't really accrue a monetary premium. However, the original protocol, you have to think about this, the original protocol always has the strongest network effects. Through airdrops, liquidity mining, a project that launched first means that there are more people holding the token in DeFi. And naturally, its holders are incentivized to maintain and increase the value of the token, right? It's like capitalism. People want to make money. And how do they make money? To make the protocol more valuable, and to make the token more valuable. And this is done via governance. So I think there are like the two main ways for the token to accrue value via governance. First, something like token buybacks, where a protocol can use its treasury and revenues to buy tokens from the market and burn it or redistribute to its holders. This is done by protocols like Maker and MakerDAO and Vesper. Second, there's other ways like revenue redistribution, where a protocol makes money and part of it goes to the users. So we discussed this with xSushi and Ren, a dark node. People that run a node on Ren can earn fees every time someone uses the Ren virtual machine. And lastly, protocols can also use these tokens to affect user behavior. So for a project like Bancor, they are a decentralized exchange, meaning that for their protocol to be valuable, the DEX has to have ample liquidity, so people can swap tokens without slippage and for a better user experience. And what Bancor does is, for anyone that provides liquidity on Bancor, you can earn additional fees and multiplier effects. This essentially incentivizes people to essentially lock in their tokens on Bancor for a very long amount of time, because the longer you stake a token, the more rewards you get. And that means that there's more liquidity on Bancor, meaning that more people will use Bancor, which means that the BNT token will go up in price and also benefit the protocol and its early token holders. And those are the main factors that I believe why governance tokens are needed. Tokens allow for protocols to bootstrap growth, to create awareness and initial liquidity for the protocol, and to spread out its tokens to a wide group of people. Also, early adopters of protocols have to be rewarded when the project grows. You have to align the incentives of early adopters and the protocol itself. Lastly, network effects will merge. Token holders will defend its protocol from forks and govern in a way for the token to become more valuable. So those are the main factors that I believe why governance tokens have value. Before I finish the video, I have to give credit where credit is due. I did a lot of research, but the majority of my insights and the takeaways I got were taken from Hasu's article on Deribit on why I have changed my mind on tokens, and also this tokenomics blueprint written by Long Hash Ventures. Both of these resources will be in the description below. Anyways, thank you guys for watching. I have a Discord group if anyone wants to talk to me. I'm in the voice chat almost every day, and I'm very open to talk to people about tokenomics, protocols that I own, and the future of DeFi and Bitcoin. Thank you guys for watching, and have a nice day.